Hello, everybody, and welcome to the Dash Trader Newsroom. The market enters correction territory, and earnings season continues to march on. So let's jump right into it. My name is Michael DeGioia, and I'm joined by my co-host, Joe Molandrino from NASDAQ Global Markets Reporter. Just trying to get the slides advanced today. Jill, how are you?
Good, doing well, Mike. Good to be back with you.
Great to be here as always. I heard you were just in Vegas. How was the money show?
We were Money 2020. It was awesome. It was really good. Lots of big fintech brands there. Big conversations around AI, identity. Had some big names. Google Cloud was there. NVIDIA was there. So two big NASDAQ 100 companies.
Wow,
really good
that's
intel.
awesome.
Yeah, it was awesome.
That's pretty awesome. So US GDP grows by 4.9%, much better than expected. In the meanwhile, the stock market slides deeper into correction territory. But certainly we've had a little bit of a comeback today. Today is Thursday. Markets have come off their lows. Traders and investors might be worried about inflation, more rate hikes, this kind of inverted situation. What are your thoughts on it?
Yeah, well, you know what? The consumer continues to be pretty resilient. I mean, that's really been the story. Certainly since 2000, when we kind of think about, pre and post COVID and where we are right now, that, betting against the consumer, it's been a really tough trade. They continue to perform despite the fact that student loan payments are coming back online. COVID savings have dwindled. Credit card balances are going up. They continue to be resilient. I think really, if you dig a little bit deeper, is the spending on services, which, meaning vacation. It's not like you do a vacation every month. It's something that's, once a year, twice a year. So where is that coming from? But I think when you look at durable goods, those are kinds of goods that last 2 to 3 years with the computers, laptops, and so forth. That's really where the growth was coming from. So I think, it's great for this particular reading, but what does that look like going forward in what's going to be a higher interest rate environment for longer? That is going to start to impact credit card balances. It's just going to get more expensive to pay. How are consumers thinking about discretionary spend versus staple kind of spending? But again, these arguments have been made for the past 18 months and they continue to perform. So I think we have to figure out, are we at an inflection point here? What will it look like for the holidays? What's budgeting going to look like for 2024? I thought that was interesting. You had also brought up the point that, we're in correction territory. We actually just did a segment on this with our chief technician, our head technician on our desk. And while NASDAQ 100 is in correction territory on a relative basis, it's still the best performing index, I believe up 31% on the year.
Absolutely, yeah, without a doubt. Yeah, I mean, the market has been incredibly resilient, and it's normal it's actually healthy for a market to pull back off of its highs after making such an incredible run.
Mm-hmm.
So we're in earnings season. Earnings season is in full swing. Many companies have beat on top and bottom line, yet shares fall, some on reduced expectations. Obviously, Meta came out with numbers. They were kind of down, with some concerns with the Middle East. But what is your thoughts overall this earnings season?
I feel like, okay, so banks are out of the way. I feel like they were okay. And I feel like we've been saying this over the past few quarters that they've been okay. Nothing crazy standing out with the exception of maybe NVIDIA over the past couple of quarters. But I think we're at this point now, particularly with the Magnificent Seven, that investors have the expectation of you have to beat handedly. You need to have good guidance, and because we saw the dichotomy with, Google did not provide good guidance, particularly on the cloud end, and you saw it being impacted. Companies that did perform well and also guided well, they're being rewarded. I think investors will particularly get more discerning, now that we're into a full year of higher interest rates and what that looks like, because we will be there for longer, what that's going to mean for the balance sheets. We see what's happening with treasury yields, and of course that's going to impact them as well. So I think, there's that expectation that perhaps the earnings recession is in. And I just think investors' expectations are going to be more lofty this time around. We weren't talking about, yes, we were talking about Ukraine and Russia in prior quarters, but, since the heightened geopolitics in the Middle East, that wasn't a theme that we were discussing in quarters past. So I'm curious to see what that's going to you know, mean when CEOs, I mean, you have this on the slide here with Zuckerberg commenting about unrest in the Middle East. How's that going to impact supply chains? How's that going to impact, you know, other companies? You know, there's a number of cyber companies in Israel that that are listed, that you have to listen to their commentary. And then, of course, what's happening with China. There is certainly a geopolitical shift here. You know, certainly domestically, you know, we're at the top of the chart there too. So curious to see, you know, what they say in a more macro perspective than anything
how
else.
it all plays out. I mean, Israel's big in cybersecurity for sure. So, you know, gonna have to watch that and see how it plays out as the months go on and as the war continues. Right? Hopefully, the war simmers down. The 10-year also has been something that has been a repeated concern. Obviously, the 10-year is around 5%. Markets are down 10%, as we mentioned, from the highs, which is officially in correction territory. You know, usually technically, once you get into this area, you get some kind of a technical bounce. But are there any other concerns that we can see going into the Christmas season? Obviously, what is the with consumers being so extended? I know you had mentioned about kind of cyclical products, and you know, I'm looking to buy a new laptop, right? So I bought it right at the beginning of the pandemic, so I'll probably go out and buy a new laptop for traveling. But my point is there anything else that we should be aware of that's hanging around the corner as we go into the quote unquote Santa Claus rally? Will there be a Santa Claus rally?
You know, it's interesting. You know, like I said, we had our chief technician on with us earlier, and really that's, you know, one of the bright spots besides the consumer is seasonality with the markets. And, you know, I don't know if that's a self-fulfilling prophecy, but, you know, it's interesting. It used to be like those last 6 weeks of the year, which is really where retailers, you know, made a lot of their revenue and earnings. In fact, the Black Friday, it's called Black Friday because that's it means when their balance sheets finally get into the black and not, you know, not the red. You know, it's how it got its name on Black Friday. But I feel as if, and I've spoken to a number of people that are retail strategists and analysts, that, you know, those past 6 weeks, I feel like, you know, what does Amazon have, 3 Prime days a year? You know, Walmart has its own version, Wayfair has its own version, where these crazy sales, like Black Friday type sales, are happening, you know, 6 months before Christmas. So do those
it's going to diffuse it? It's diffusing its effect.
It could dilute it. But you know what, though, even when they show, I believe it's Adobe and MasterCard, they show their consumer data after these Prime Day events, and they continue to beat year over year. So it just seems as if it's spread out more. Yeah.
Yeah, I mean, that actually is a great point. I mean, I have seen on my phone at least 3 or 4 kind of Prime Day offerings. I know there was one that just passed on like October 10th and 11th, which was around Veterans Day, or Columbus Day. Is that Veterans Day? No, it was November 11th is Veterans Day, and then it was around Columbus Day. But needless to say, you know, the question is will that diffuse Black Friday and Cyber Monday as we go into the holiday season, or will the consumer continue to be robust and dig deeper into their credit cards and spend more? Or, you know, or is there the final catalyst going to be, you know, major layoffs of some kind? Because right now there's no sign of that. I mean, there's been some small cracks in the labor market, but really nothing significant.
Yeah, Mike, it's a great point that you make. And I think, you know, as we mentioned at the top here, that betting against the consumer has been a losing bet. Part of that is we're at 3.8% unemployment. Virtually everyone who wants to work is working. And, you know, we're not, I don't want to say yet, but we have not heard any indications in the marketplace that there are particular sectors like, what was it? I think it was last year or last spring where we saw a number of tech layoffs because they overhired with COVID, but you haven't heard a theme of one sector being under pressure or not. There's a seasonality with retail. We know that there's always hiring over the holidays, but you know, the fact of the matter is there's so much growth in tech, particularly in cybersecurity. I mean, you can read any tech survey of any person in the C-suite where that one area they're not cutting back on spending is in cybersecurity. So you know that's going to be a robust employment market as it relates to tech jobs. You have this transition of moving to newer technologies like AI as an example. So we haven't heard any areas of the marketplace where there will be a domino effect if one goes under than the other. And I feel like while that's still the case, and if you want to work, there's jobs out there.
Yep, without a doubt. I think the point that you said, if you want to work, we are at full employment. There's a lot of people that are not in the workforce, but certainly if you want to work, we are at that point of full employment. And that's something that the Fed certainly looks at, is they look at, not only are they looking at inflation, but they're also looking at those employment numbers. So
Yeah.
on that note, Jill, I guess I won't see you until November 9th. And we
Yes.
will, by that point, jump into the next number one best trader competition. Have a wonderful weekend, and I'll see you in 2 weeks.
All right. See you. Thanks, Mike.
Bye-bye. Thanks, Jill. All right, so bringing up the number one best trader competition, it is that time of year again. It is time for the fall 2023 competition. Registration is now open. The early bird discount is over. Can't get the early bird discount anymore. Get $50 off the entry fee by using YT50, okay? YouTube 50, YT50. Register today, numberonebesttrader.com. So make sure that if you haven't registered already, you can get that $50 off and continue your early bird savings by just using that coupon code YT50. Excellent idea for anybody who wants to get their name up in lights in the New York NASDAQ market site at Times Square, crossroads of the world. So just jump right in and do our market analysis. This is time for us to jump to the charts. We did have a nice rally on the way, but seems like it didn't last long. What I'm sharing with you right here on my Dash Trader Pro is, here's the S&P. This is actually the 15-minute chart. Let's see, is it? Yep, 15-minute chart. Actually, this is the 15-minute chart. I was just looking at the 5-minute. But what we have going on here is a big move off the lows. So what we would call that is a trend line break and fade. And let me draw my trend line in here. So here's my trend line break and fade on the NASDAQ. This is Thursday. So obviously by the time you watch this, this will already come to fruition. This is a first sign of trend change reversal. Usually on the, on the intraday chart, you'd start to see the shift. But certainly market breadth is, it has been pretty much bearish to the downside as we come into the close of the day, just about 12 minutes left on the day. And we had a big breakdown, and then obviously now we had a big rally, and then the rally is now fading and starting to move off those lows. But let's just take a look at this on the daily chart. Okay, this is the SPY on the daily. So we broke into this kind of daily support level. Okay, we've pretty much made a bubble, or potentially a head. Okay, so this would be a shoulder, that would be a head. Potentially a head and shoulders type pattern on the SPY. This would be a good level of congestion for the market to find some feet, okay, find some legs, and potentially show some support. Now, I'm not saying that the market is going to reverse. I'm just saying that this is a good technical reason or technical area to find some. And I'm just showing you what is here. Here is a handle from a cup and handle, right? So we have a cup and handle, and then this is a nice technical area for us to find some support. Let's go into the QQQ, which is the NASDAQ 100. You can see this is a neckline, or this is a major support break. The Q is a very different picture than the SPY, as we have a kind of a triple top descending highs, and then we have a very, very, basically a breakdown coming right off declining moving averages, which is a fairly strong sell setup. On the NASDAQ, we got a ways down to 320. I don't really see any strong support here like we do on the SPY. Let's take a look at Apple. So goes Apple, so goes the market. You can see Apple kind of mirrors the look of the NASDAQ with that descending triple tops. We could take a look at Meta, one of the strongest stocks in the market, now with a double top and making a strong bounce after those, the kind of the negative look at the earnings. but certainly Meta showing some weakness as well, although it did make a strong bounce off the 280 number. Let's see, Tesla, which used to be the souffle, now looking like a small N pattern. Tesla was super strong, and then obviously as of late, Tesla has not looked so healthy. It's kind of got gap disease. You see the gaps here, gap there, gap there. We call that gap disease, or at least I do. Things that you should certainly be mindful of is Tesla's chart is not looking too healthy. But let's just go to, let's see, MSFT, Microsoft. So Microsoft, big gap up, massive gap fade today. That was actually from yesterday's big gap up. So that did not hold the gap, but it is showing relative strength compared to the rest of the market. All right, on that note, let's take a look at GBTC, right, which is Bitcoin, right? Bitcoin making a huge breakout. GBTC, Bitcoin making a nice run up to the upside from 19 all the way up to 27. It's starting to give up some of the goat, giving it up a little bit. Let's take a look at oil, USO. Making a huge run, but certainly starting to slow down a little bit. So USO also, which is possibly good for inflation. If oil does not go higher, oil might be ready for a pullback, and therefore this is something to just keep in mind. Let's take a look at GLD, the old man, right? Gold is on the rise. So gold rallying from 168, GLD, the ETF for gold, from 168 all the way up to 183. So just taking a look at some of these indicators, and it certainly looks like the market has made a significant pullback. And at least in the case of the S&P, we might be ready for a bounce. NASDAQ looks like it's got a little bit more of correction, but it has been up tremendously already this year. So let's take all that into consideration when analyzing the markets. So let's jump to the slideshow once again. Just a big reminder for everybody that it is time for the competition. If you did not register, you got to register soon with the code that I provided, which is UT50. Okay, stay up to date with all things DAS by getting our monthly newsletter and email. Simply fill out the form at the bottom of the webpage at www.dastrader.com. Subscribe to our YouTube channel at DAS Trader TV. Follow us on social media at DAS Trader on LinkedIn, Twitter, Facebook, and Instagram. Thank you very much for joining me, and I look to see you in the #1 Best Traders competition. Trade well, everybody.